Hey folks, Dan Frio here with your closing bell for February 24th, 2025. So what do the headlines have to do with this that have to do with this? Well, that's our agenda for today. So without further ado, let's get over to it. So my name is Dan Frio. Hopefully I can be your nationwide mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico, and I'd love to help you if you're trying to navigate getting a mortgage in today's market. I'll give you all my information at the end of this video. So let's get out to the news that we have for today to see what's happening in the markets. So there was really no economic news out today that caused really some reactions on Wall Street. You can see that right through here. The only thing out was a 2-year auction, but we do have some interesting headlines coming in that we're going to want to focus in on today. Trump says tariffs on Canada and Mexico will go forward. And then you have people over here against the DOGE system. And then you have Jamie Dimon piping in saying, you know, the government is inefficient, and we need something like DOGE. So how can we tie all this together to figure out what the heck's going on with mortgage rates? Well, that's my goal for today. So let's get over to it. Here's what rates did so far today. They're down 2 ticks, really nothing to write home about, but it's a nice direction on where we're going. I'd rather see down 2 ticks than up 2 ticks. So here's what you have to understand. If you're pro-Trump, against Trump, not the issue. If you're pro-DOGE or against DOGE, not the issue. What we're trying to figure out is how we can get the government more efficient so we can drive down this number right here. And this is our national debt. So let me explain why this is the biggest role that's really affecting the markets right now. The new government that was in place, they elected a new Secretary of the Treasury, and his name was Mr. Bassett. And he said, you know what, we're not going to fight the Fed anymore. We gave up with that. We're going to do the things that we can control, and that's right through here. So we can control the national deficit. So how does this play a role in lowering rates? Let me explain it to you. Here's how yields are created. So, for example, the U.S. government, when they don't have enough money, they have to issue Treasury bills or Treasury bonds. Okay, they've issued so far in the tune of almost $37 trillion of bonds. Okay, so that's a lot of bonds to hit the market. Here's what happens to this in this bond or any bonds, and this is basically interest rates in general. Let's go back to 2008. What happened in 2008? Well, a ton of people were getting foreclosed on because of subprime mortgages. Okay, so what happened to all those homes? Well, people just massively put them on the market, and you had a flood. You had way too many homes that investors or home buyers could buy. So what happens? Prices just keep coming down until an investor says, okay, that price is right for me. I'll go ahead and buy. Well, kind of the same thing with bonds. Okay, so you have Treasury bonds issued by the government of the United States out there. You have corporate bonds, and you also have mortgage bonds. So you have record amounts of yields or bonds hitting the market. Well, what happens? Kind of similar to what happened in the housing market. Prices go down. So what happens to yields when prices go down? They go up. Let me explain it to you. If we go over to this section right here, this is what's going on with the mortgage-backed security bond right through here. This is where we've been 6 months ago. Well, I want to show you let's go back to one day. Okay, so here's today's chart. The bond is up 16 ticks. Well, what does that mean? Well, it's going up. So what's happening to rates? They went down. Okay, so that's what we're seeing in the market. So what happens when you have way too much of something? Well, the market goes down. Well, what happens when the price of a bond goes down? Rates go up. Let's go back to where we were here. As the yields on this, or the price of this bond went down, this is where we were 6 months ago on mortgage rates. As this goes down, rates go up. Okay, so that's what we're seeing. So that's why we're focused in on, what the Treasury is doing, what the government is doing with our money. So now you're starting to see the headlines such as this. Jamie Dimon calls the U.S. government inefficient and says Elon Musk DOGE efforts are needed. Well, let's get actually to what he's concerned with all this stuff, and he put some pretty good message together here. So let's listen to Jamie Dimon. He's the CEO of JP Morgan, one of the country's largest banks, and he's probably one of the most famous bankers in the whole world, to be honest with you. Let's see what his take is on the government efficiencies as well as DOGE, because, again, we want a banker's view. So let's take it away over to Jamie Dimon on CNBC.
Joining us live from the firm's Global Leveraged Finance Conference down in Miami Beach. I was going to say sunny Miami Beach, but I haven't actually seen the weather there. Leslie Picker is there and has an exclusive interview. Leslie, welcome to you.
Thank you, Kelly. Yeah, it's actually raining, but lots of rainmakers. I'm sitting with one of them, Jamie Dimon. Thank you so much for joining us from your Global Leveraged Finance Conference. Let's get right into the macro environment, because the market really seems fixated on some of these growth concerns regarding weak retail sales, soft consumer sentiment, policy uncertainty, and the like. Does this skittishness match what you're seeing within the bank, as well as what you hear from clients at this conference and beyond?
Yeah, basically it does. You've had a slowing down. We've had this huge boom after COVID and all the money that was given out and spent. And so we see consumers are kind of back, I'm just going to normal. So they don't have all the extra money, but they have jobs, wages are going up. But if they substitute a cheaper product for a more expensive one, they cancel a trip. So you're starting to see what I put out normal. Credit costs have normalized. So it's just almost back to what I call a normal environment. Whether it gets better or worse from here, I don't know, but kind of normal.
Normalization. A key wild card that people are trying to grapple with has been just this flurry of executive orders coming in from Washington, and whether they're going to be net positive for growth. Point 72, Steve Cohen saying on Friday that tariffs, tighter immigration laws, and government cost-cutting efforts led by DOGE could weigh on the economy. Do you agree with that?
Yeah, could they? Yes, of course. But I think, the economy is like this huge ship of state. And these things are, at the margin, may not change that ship of state. And also, it really depends the quality of what they're done. More effective government, more efficient government isn't bad. It's actually a good thing. If they get overdone, tariffs properly used, if they're overused, if there's retaliation, yeah, they could be bad for the economy. But, if they're just making up for use for negotiations, making up for unfair trade. So I'm more in the wait and see attitude about how this all plays out.
How do you think about the self-described chainsaw approach that DOGE is taking to the federal government? Is it something you support?
Yeah, it's too binary to say support or not. Here's what I support, okay? The government and everybody would know the government's inefficient, not very competent, and it needs a lot of work. And so you and I, it's not just waste and fraud, it's outcomes. Why are we spending the money on these things? Are we getting what we deserve? What should we change? So I think doing that needs to be done. Remember, it was tried by Al Gore and Bill Clinton. It was tried by a bunch of other folks in the past. Yes, they should try. You have to understand that whenever you go to any big institution or the government, the bureaucracy pushes back on everything. And they will hear every little thing they're going to push back on. So you have to be strong if you're going to do it. I'm hoping it's quite successful. If there's overreach, things they're doing which are not legal, of course you stop it. But I'm hoping that's not the case. But again, it's very early stages to tell exactly what it's going to mean and how it's going to affect the economy.
Is success defined by bringing down the deficit?
I think ending fraud and waste and abuse, if it brings down the deficit, yes, but also making systems more. If you just identify that we can build better systems across these departments that bring more effectuate the jobs it's supposed to do, modern technology, like you've heard about the FAA, absolutely should be doing that. Now, some of them may actually cost money in the long run, in the short run, but it'll save a lot of money in the long run, and it saves lives. So we have to learn to do the thing right. It's not just about the deficit. It's about building the right policies, procedures, and the government we deserve.
I couldn't have said it any better than myself. So I don't want to get political. It's not one side against the other. It's just we need more efficiencies in the government. How they do it, that's going to be up to the courts and the government in that section. But that's our message for today. If we go back to where the rest of the week's economic news looks like, let's go to tomorrow, see if there's any juicy information right through there. We have the Case-Shiller Index coming in to show us how much house prices are up or down for the year. And then we also have consumer confidence. That'll be coming in tomorrow. So we ended the day. The bond market ended up 16 ticks. We go over to the equity markets. Let's see how they fared for the day. Now, not that good across the board. The VIX is up 4%. So the VIX is at 19 or almost right now. That's saying the markets are really skittish right now for something. And it's all this stuff. There's a lot of smoke out there when it comes to tariffs. Let's go see what the headlines just bought. Bank of Korea just cut interest rates since 2022 as the country struggles with growth slowdown. So there's issues all over the country, folks. And so what I try to provide every day is the reasons why rates are doing what they're doing. And so you guys understand the markets. So that's my whole content for today. So that's it for this video. My name is Dan Frio, where our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, I work at a federally chartered bank that makes me licensed in all 50 states as well as Puerto Rico. And we're also a large brokerage. We're set up with over 30 different other lenders. So basically, I can use my rates in my programs, and I can use up to 30 other banks, their guidelines, their rates, their everything to help navigate you guys through the housing market. I don't care if you're looking to buy that first house, looking to refinance, or maybe buy that first investment property. I want to make sure I have the programs for you, the rates for you, and I can put the whole package together like nobody else. So to find out more about me, go to therateupdate.com. There's about 3 or 4 ways to reach out to me. One, you can put in your application, just click that and you're on your way. It'll get sent to me and I'll get you on the phone and answer any questions that you have. Or 2, you can schedule a consultation with me right through here. Or you can scroll down to the bottom. If you want to jump in the front of the line, you can go all the way down to the bottom. Give us a call at 844-775-5626, and the numbers are finally working. Or you can reach out to me personally at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic evening, and I can't wait to see you back here tomorrow to see how this mess starts another day. Thanks for watching, folks. Take care. Bye-bye.